So what specific factors are really driving these 2026 rate hikes?
So my focus is the marketplace. So people who buy their own health insurance. And the primary factor that's driving premiums so much higher is the impending expiration of the subsidy enhancements. And so this is normally the marketplace subsidies just grow to keep pace with premiums. So as you mentioned earlier, the 26% average rate increase, normally the subsidies would just grow to keep pace with that. But because these subsidy enhancements are scheduled to expire at the end of 2025, the subsidies will not be as big as they would otherwise have been. And some folks will lose their subsidy altogether. And so, unfortunately, the result of that is that for people who get a subsidy in the marketplace, which is nearly everyone, the average premium increase is more than 100%. It's an average of about 114%. For some people, it's much more than that, and that is because those subsidy enhancements are scheduled to expire, and Congress hasn't yet worked out a deal to extend them.
Wow, 100%. That's a shocking number. So then when people go on healthcare.gov right now, how accurate are those prices going to be? And could they change if Congress acts on subsidies, as you mentioned?
They could change if Congress does something to extend the subsidies. So what you're seeing right now on healthcare.gov and the state-run marketplaces in states that run their own platform, you're seeing the price without those subsidy enhancements. So this is your worst-case scenario. If you're looking on there right now, this is as high as the premiums would get for 2026, but it's possible they could go lower. This is a very active situation in Congress. Obviously, this is the crux of the issue with the government shutdown. We don't know what will come of that. The subsidy enhancements could be extended. They could be allowed to expire, or they could be extended with some sort of modification. If they get extended, or if they're extended with some sort of modification, a lot of folks will see a lower premium than what they're seeing right now. But this is all just very much up in the air, and we don't know where it will go from here.
Maura, our correspondent, mentioned that, a lot of young people may opt out because of the price of it. And I know that a lot of these exchanges depend on more people paying in. So if we find that a lot of people can't afford it or they drop out, would they perhaps go up at some point because there's not as many people paying in?
Well, absolutely. That is one of the factors that led to that overall 26% rate increase for just the base premiums. Part of the reason for that is because the insurance companies knew that these subsidy enhancements were scheduled to expire at the end of the year. And when the carriers were designing their rates for 2026, Congress hadn't done anything to extend the subsidy enhancements. So they knew that younger, healthier people would see these higher premiums, and some of them would opt to go uninsured. So the fact that the overall risk pool ends up being less healthy is certainly having an effect already for 2026 on higher premiums. And yes, that would continue to be the case going forward in future years. When your risk pool is not as healthy, everybody pays higher premiums.
So if Congress does come to an agreement to extend the enhanced subsidies, could that also not only help people pay for it, but lower it a little bit more? So we might see even more of a decrease in price, or are they going to take advantage and keep that 26% hike there?
So the base premiums are pretty much locked in at this point. It would be really unprecedented to have insurers go back and rework those after open enrollment is already open. But fortunately, the Affordable Care Act does include a way to sort of address that on the back end. And it's that if premiums end up being set too high, which can happen for a variety of reasons, claims can just come in lower than carriers were anticipating, then over the coming years, carriers actually have to pay rebates to the people who were enrolled in those plans to rebate them for the excess premiums. So one way or another, yes, that would be addressed. If Congress manages to extend the subsidy enhancements and we still end up with really robust enrollment, and those premiums end up in hindsight being set too high, there is a mechanism to make sure that folks get their money back from
That's
that.
good. That's good to know. But we know that there's still a lot of uncertainty, or Congress will extend the enhanced subsidies. So for somebody who might be watching at home, who really depends on that help, what's the best strategy while they wait for answers?
Absolutely. Like you say, it's very uncertain right now. We don't know where this will go. So I think what people need to keep in mind is just keep paying attention, see what's going on with this. Don't just go on the marketplace right now and decide that it's too expensive and then forget about it, because then you might miss out if they end up, a few weeks from now with a deal reached. You want to make sure that you're on top of that so you can take advantage of those premiums. December 15th in most states is the deadline to sign up for a plan that takes effect January 1st. So just keep watching, keep paying attention. Maybe go in and get your marketplace count all situated for 2026, so you have your income projected and you have your household all in there. If there's been any changes, get all that sorted out. But you don't have to pick a plan right now. If you do pick a plan right now and then Congress does reach a deal to either modify or extend these subsidy enhancements, you could always go back and pick a different plan if it better fits your budget at that point. And you can do that up until December 15th, and it'll just take effect January 1st. So
good to know.
Just stay tuned.
Yeah. Okay. And Louise, if somebody really feels like I just can't afford this coverage, what would you tell them? Are there low-cost options out there that can still protect them from big medical bills? Because the last thing you want is to have absolutely no protection, no coverage.
Right. I really hesitate to recommend anything other than ACA compliant major medical coverage, just because there are so many gaps and holes in other types of coverage. There will certainly be people who transition to, something that's not ACA compliant if these subsidy enhancements are allowed to expire and they just can't afford real health insurance. I just think if you're going to do anything like that, be really careful to read all the fine print, because that's where, those sorts of plans will exclude pre-existing conditions and they might not cover all the things you need. So you just really want to go into those plans with your eyes wide open as far as understanding what's not covered. And that it is a big trade-off from real major medical health insurance.
Some good advice there. Health policy analyst Louise Norris, thank you so much for your insight and your expertise on this. I know a lot of Americans are holding their breath this week and in the next couple of months. So thank you so much. We appreciate your time.
Absolutely. And I will continue on healthinsurance.org to update as this goes on. So people can check in there too to see what's going on with it.
Great. Good advice. Thank you for that. We appreciate it.